this is a very big week as we have some interest rate news coming out this week on Wednesday. We also have inflation news coming out. So you guys have to pay very close attention, and we're going to break all this down in this video, plus our thoughts on what we think is going to happen in the stock market and the picks that we gave you guys in the last couple of videos. So, bro, let's just dive right in, bro.
Yes, for a fact, bro. So let's start it off with none other than CPI, right? CPI. So CPI is this coming Tuesday right here. And what we know about last CPI was that month over month, items rose by 0.4% in April, right? So you saw shelter, used cars, gasoline, trucks, they were all up month over month. And so we're kind of watching those sectors, those industries right now, because they honestly, in fact, impact inflation a lot. And so we don't want that to keep moving on the upward projection, because guess what? That means CPI will keep moving up. And what does that mean? Rates may have to continue to move up. What does that mean? The economy will have to move down as far as our expansion, right? So that's a bad direction for us. So even last time, year over year, we know that those numbers are 4.9%. So we're looking to see if that could come down, because we don't want inflation to be sticky. We don't want to start seeing inflation pretty much stay right here at this elevated rate, because although it might have come down from 9.1% back last year, 4.9% on inflation is not good, because the target is 2%.
Bro, I just paid $7 in gas, so I get it.
$7 in gas is ridiculous. Ridiculous. You should have said that's not sustainable. Who wants to be paying prices? So we're watching for that. And honestly, like you said, we're watching for that, right? That's a major point going forward, because look at the Fed watch tool. The Fed watch tool right now is basically what we use to see what the Federal Reserve may be doing in upcoming meetings. And as we know, their actions are dependent on data. So like I said, CPI, because what CPI will do will tell us what the Federal Reserve will do, right? So what's currently projected is that we are going to hop. And Nusi, do you want to briefly explain what hop means?
Yeah, so essentially, guys, like you guys have heard us say, basically, either it's a pausing of interest rates where we're just not going to increase or decrease, right? Obviously, there's an increase where we're increasing interest rates, decrease where we're bringing them down. A hop scenario is, let's just say 1 month, we decide to pause interest rates, and then the next month, we decide to increase interest rates. That's because we're not sticking to one direction. We're choosing this pause direction, and we hop and increase rates. That's why they call it hop.
Yep. Great job explaining that, bro, because that's exactly what is projected to go on here. So what Fed funds futures traders are pricing in, which is what the stock market reacts to, they're pricing in that the Federal Reserve will indeed not raise interest rates this upcoming Wednesday. There's 71% chance saying that we will not raise interest rates this Wednesday. We're going to stay right where we are. But when the July meeting comes, this is what a lot of people are not talking about. July is not looking too good when it comes to interest rates, because there is a 53% chance that we're going to raise interest rates by 0.25%. And there's actually a 16% chance that we're going to raise interest rates by 0.50%. Who saw that coming? Especially after they don't raise it in June to now going potentially 0.50% in July. I think that'll shock the markets, and we're going to go extreme. We're having a horrible reaction to that.
Yeah, and I think I actually agree, right? Because at the end of the day, guys, like the market likes certainty, does not like uncertainty. So when we have situations like a hop scenario, or we're not sure what's going to happen, investors don't know where to put their money, banks aren't sure what's happening, companies don't know what to do. It's not good news, right? Because now everyone's uncertain. They don't know which direction to go in, which could then lead to a market going down. And we're not saying bear market, we're not saying recession, anything crazy, but at the end of the day, it's not the best market to be in, because you're not certain what's happening.
Nah, literally, like when you really add these numbers together, that's about around a 70% chance that we're going to increase in July in general. So that's not looking too good. And then going forward into the year, you'll start to see that there's either a belief that in September through November, December, we're going to either start to decrease at that point, or we'll stay right where we are at that elevated rate. But nonetheless, one thing that's for certain at the current moment is that July is expected to be the last raise of interest rates. So like I said, September, November, December, we may decrease, we may pause, but at the end of the day, we shouldn't see higher interest rates than what we see in July. So what I think they're trying to do is maybe one more final blow when it comes to interest rate hikes before they just like take the gas pedal, because it's very, like we said, it's data dependent, and it takes a while to see how interest rate hikes affect the economy. So I think what we're doing is like, you know what, let's do one more blow just to make sure we do what we have to do. And right now we're going to just see what happens. And that's pretty much where they've left us as an economy at that point.
Yeah, and that's the thing, right? So data is going to drive everything. It's also going to just drive the market, which we're about to cover right now in terms of how the market has been doing. Because so far we think, right, projections have been saying everything is looking good, we're going to be okay. And that's why we've seen the stock market actually go up, right?
Yeah, yep, exactly. And look at it, bro. You can see it right here. So remember, if you see the direction going up, that means prices are going up. The S&P 500 has absolutely been going up. We actually cracked over the August highs. The NASDAQ already cracked over the August highs some weeks back. The S&P 500, as we said, would catch up, and it did exactly what we said it would do. And we actually made based on that projection. So one play that Newski and I talked about on the channel was we got into KO, the regional bank ETF. We got into swings on that because we're like, yo, this is an undervalued industry. It got sold off so hard based on the bank failures that were going on. It seems to have put a backstop to it, at least temporarily. It's undervalued. Let's try a swing. We made some swing trades on it. We swung some shares on that. I also personally swung an option with my shares. Newski will tell you that we're doing pretty well in the shares, right? How much were we up on the shares so far?
Yeah, just in a short time span, we're up 12% already. And we're projected to even go high because I think that play is going to work out pretty well. And options, obviously, you're killing it in that world too.
Yeah, the option is already up over 200% to just in a short few weeks that we've really been in it. So it's good. It's going well so far. Something else we talked about was Tesla. I know you guys wanted to hear about Tesla. They've been killing it, as you guys know. Newski been in there with shares for a while. I'm in there with options. My options were up over 300%. I took profit on it, but I may get back in because I think it has more upside. Newski, what price you got in on Tesla in?
Yeah, so I actually told you guys about Tesla at 166. And once again, this is not, I don't want this to be like over sniping here. I don't want none of that. There's no crystal ball here whatsoever. It's truly just looking at undervalued companies, which makes sense to us, which have potential, which have a good balance sheet, which have a good statement ahead of them that they're providing us ability to read into what they're doing, and they have a future, right? That's what we look for here on the channel. And we gave you all this gems earlier in all the other episodes we talked about in the past. So yeah, not trying to say anything crazy, but in my shares that I invested at 166, I'm up over 50% now, or actually nearly 50%. It's like 48, 49%. So definitely pretty happy on that. It's definitely a long-term hold too.
Definitely a long-term hold. We believe in Tesla strongly, and man, we killing it on that end. And like we said, FOMC is this Wednesday, and that may affect a lot of things. So we're watching closely. You guys need to be watching closely. Make sure you know what's going on there, because whatever, we all know, they say don't fight the Fed. Whatever Jerome Powell says on that stage could send the market straight higher or way lower. So you got to really watch out to see what he's going to say this Wednesday. So stay tuned for that. Tuesday will affect his words on Wednesday. So stay tuned for the CPI report. And that's really what we have for y'all right now.
Yeah, that's a fact. And we're going to make sure we continue to provide you this news and updates, right? So definitely make sure you are subscribed to the channel. But if you're still watching, thank you. We appreciate you. Please make sure you like and comment on this video as well. Plus, hit that little notification bell because we drop
2 videos a week.
And you don't want to miss them. Make sure you check us out on Wednesday because we will cover what is everyone talking about with Jerome Powell news, as well as what this whole CPI data is looking like. So check us out on Wednesday. Until then, peace.
Peace.
Soundstripe.